Push-ups, pull the rug from the under. Medcare company has posted robust results, but experts don't want you to invest in. Medcare company posted a great result. Hi, Alia Capola. What are you guys doing? आज मतलब ऐसा रिजल्ट आया है कि जो यूएस का मार्केट था वो पूरी तरीके से क्रैश हो गया, क्योंकि उनके पास डेफिसिट ही नहीं बचा, डॉलर ही वहाँ पर कम हो गया है। तो सीधी सी बात है, डेफिसिट तो आने ही आना था वहाँ। Yeah, I can speak English, I can speak Hindi too. Are you a trader or not? Please like and subscribe the channel if you're from India and from other countries. Please like the stream and subscribe the channel. What? What you're saying? Hi Megan Baker. Hi Alia Pola. Hi Vikram. Oh, you are playing. Go play with your friend. Bye. Nice to meet you too. Hey Megan, what you are talking about? Are you good? Everything all right? Mm, yeah, LOL too. Yeah, I'm from India. Where are you from? No, Michigan is not oh, Michigan. Michigan, I think in the US, right? I knew about Michigan State University. Okay. Are you my subscriber? Please subscribe the channel, Megan. What do you guys do? Okay. Are you my subscriber? Please subscribe the channel, Michigan. We need a lot of subscribers. We have to grow this family to a large extent. Are you interested in stock market in US like Nasdaq Dow and S&P 500? New York Stock Exchange. Have you heard of that? Or just hi guys, what you guys doing? Yo, yo. Tick, 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 tick.
Sugar pieces, thank you. This shit ain't no average.
Hi guys, what you guys doing? Please like the live stream. check. Young triple. They don't like that. They don't like us. They don't like us. Tudo puxando. नखरे नकर शके मुर्दी पगे बलाली बकरी चचकत हसीते Let's discuss. Gajipata sinte, karya karite. Make sure you like, subscribe the stream. Like bros, like. niche community related to your content. No pre-stream promotion. If no one knows you're going live, they won't show your stream discount on social. New channel. Viewers likely stumble on new streamers unless they are actively looking. Stream consistent. Same reels. No niche or unique group. You are playing situation games like Fortnite, Warzone with no unity. It's hard to stand out. Choose games or content with small, passionate audience. Or bring unique personality, no engagement early on. Viewers who click and see no chat, activity or silence may leave. Solution: viewers talk even if no one is there. If viewers who click in see no chat, activity or silence may leave. ठीक है. Solution: always talk if no one is there. Describe what you're doing. Tell stories or questions out loud. Technique: poor audio quality, video quality, or inconsistent stream behavior can turn people away. Make sure your stream looks good and sounds good. Use overlays, music with stable bitrate settings. Like feedback on your stream setup. Where you're streaming: Twitch, Twitch, YouTube, Gig, Facebook Gaming. What you stream: specific game, just chatting. Stream title: what your stream title are using, how people discover your channel. Do you want to share your channel link? Are you posting your streams on other social media? YouTube and stream title content. Type of gaming, music, or reading tutorials. Title using your streams, thumbnail. Stock market. Stock market. Stock market, live stock market, live stock market, analysis based stocks to buy, market trends and tips. Quick data. Takes use a mixed string trading, financial news, editorial line, market analysis, stock market best market trends and tips, market trends. Does not mean that Indians are critical on you. If you're on a default stream, reviews may pass it on. Bold text, live stock market analysis, has engaging professional visuals. This game is stand out from financial streams. Channel branding. Streaming from Mumbai. To use apps that allows screen sharing from the mobile. Streamlabs is a popular app that allows you to try. It can capture your screen so you can display your stock markets as your stream. Streamlabs start on this app. Okay, to share your charts, open your charting. Thinkorswim or any stock charting. Streamer use the screen capture or phone's screen. We'll see your chart along with your face reveal. Stream lessons on the target. Yes, apps to stream. The apps you monitor. So it's stream is to select screen capture. has the ability to share a screen but won't stream directly to your stream while streaming. Capture your screen using a streaming app like Streamlabs. All this is to consider using our desktop phone chart and how to additional contents. This way you can use your desktop. Charts while you go on the Streamlabs. Does Streamlabs consume more data than YouTube live stream? Hey guys, what you doing? Let me know where you from. Make sure you like the stream before you leave. Please subscribe the channel if you're new to the channel. Hey guys, make sure you like the stream. Make sure you like the stream. ATM charges rewards. What? RBI's new rules. New rules on ATM charges starting 1 May 2005. The Reserve Bank of India has revised the ATM cash withdrawal charges across all banks under the new guidelines. Customer will now charge a maximum 23 rupees per transaction after exceeding their exceeding their monthly free transaction limit. Previously, the cap was 21. These charges may apply to all commercial banks, regional, rural banks, cooperative banks, white label ATM operators. Importantly, the free transaction limit remain unchanged. Live free. 5 free transactions at own bank ATMs, 3 at other banks ATM in metro cities, and 5 in non-metro cities. Basically, the HDFC Bank has aligned its charges with the new RBI framework. Customers can continue to enjoy 5 free transactions per month at HDFC Bank ATMs once this limit is exceeded. A fee of 23 plus applicable taxes will be levied for each additional cash withdrawal. This change reflects the industry-wide update from earlier 21 rupees per transaction. No financial transactions such as checking balance, mini statements, or PIN changes remain free of charge even after the limit is crossed. SBI. What is the charges inside the SBI Bank? SBI State Bank of India implemented its revised ATM transaction charges early on February 1, 2025. All SBI savings account holders receive 5 free ATM transactions at SBI ATMs every month. Additionally, depending on their average monthly balance, they may be eligible for more free transactions at other bank ATMs. For example, customers with an AMB between Rs 25,000 and 1 lakh get free transaction at other banks ATM, while crossing maintaining over 1 lakh can enjoy unlimited free transaction. Beyond the free limits, RBI charges 15 plus GST at its own bank ATMs and 21 plus GST at other bank ATMs. The ICICI Bank has also adjusted its ATM charges in line with the RBI's announcement. The bank offers 5 free transactions per month, which includes both financial transactions at ICICI Bank ATMs. After the free limit is exceeded, customers are charged 21 for each additional financial transactions. For non-financial transactions such as balance inquiries, the bank levies a charge of 8 rupees 50 paise plus GST per transaction. IndusLand Bank customers now face updated charges for ATM withdrawals. Once the fee monthly limit is exhausted, a fee of 23 rupees per transaction per financial transaction is applicable at non-Iceland Bank ATMs. This move is consistent with the broader market trend across the banking industry, which is responding to rising operational costs. The bank continues to offer standard fee transaction limits as mandated by the RBI before applying the new charges. Punjab National Bank ATM charges. Punjab National Bank has also revised its ATM transaction charges in accordance with RBI's updated policy. Started May 9, 2022. Customers will be charged 23 rupees per financial transaction and 11 per non-financial transaction, excluding GST. At other banks, ATMs and often free limits are exhausted. These charges are aimed to standardize ATM transaction charges across the banking sector, while ensuring customers are informed about the potential costs of exceeding their monthly quota. So, in today's market, Sensex slumps 800 points, Nifty below to 24,600 as global sentiment soars. Indian benchmark equity indices traded lower on Thursday, dragged by banking and IT stocks. US fiscal concerns and rising treasuries weighed on global investor sentiment. The BSE Sensex fell 812 points or 1% to 30,784, while the Nifty 50 dropped to 69 points or 1.08% to trade at 24,554 around 9:33 a.m. Most Asian markets fell in early trade following overnight losses on Wall Street as yields on 20-year US government debts hit their highest level since November 2023. Investor sentiment has remained fragile since Moody's downgraded the United States credit rating last Friday. Concerns over the country's rising debt, high treasury yields typically make bonds more attractive to foreign investors, prompting capital outflow from stock in emerging stock markets like इंडिया. अब मान लो यूएस ट्रेजरी बॉन्ड्स हैं, उसकी प्राइसेस ज़्यादा हो रही हैं, ठीक है. यूएस ट्रेजरी की ज़्यादा प्राइस हो रही हैं यूएस में, तो जो इन्वेस्टर्स है वो ज़्यादातर शिफ्ट हो जाएगा इंडियन स्टॉक मार्केट में, ठीक है. अब सेंसेक्स पैक का देख लें, टेक महिंद्रा, पावर ग्रिड, एच एल टेक, इंडसलैंड बैंक ने ये एडवाइस नहीं फॉर कोई फाइनेंशियल M&M. What top laggards? While only Adani Ports and Tata Steel open with gains. Adani Ports और Tata Steel ही मतलब ओपन हुए गेंस के साथ, बाकी सब ऐसे हो गए, कोई भी सारी मार्केट्स आज डाउन हुई. उसका इंडसलैंड बैंक है वो कि तो 5.9% हो गया, डाउन स्लिप हो गया, ठीक है. आफ्टर द लैंडर रिपोर्टेड कंसिडरेबल, क्योंकि उसका नेट लॉस और क्या 2,329 crores इन Q4 फिजिकल है 25. अब उसके बाद जो लॉस आया है इंडसलैंड बैंक का, वो ज़्यादातर उसके डेरिवेटिव सेगमेंट से आया है, ठीक है. अब जो क्या है कि मतलब स्टॉक मार्केट ये बोला जाए कि रिकवर हो जाएगी. अब जो निफ्टी बैंक है, ऑटो, FMCG, RT फार्मा, कंज्यूमर ड्यूरेबल्स, ऑयल एंड गैसेस, ठीक है, ये सब सारे जो सेक्टर्स हैं 0.5% से लेकर 1.5% तक ड्रॉप हुए. ब्रॉडर मार्केट में जो निफ्टी मिड कैप है वो 0.35% से लिफ्ट हो गया, और जो निफ्टी स्मॉल कैप है वो 0.1% तक स्लाइड हुआ है. टोटल मार्केट कैपिटलाइजेशन, और जो टोटल मार्केट कैपिटलाइजेशन, ठीक है, 2.5 लाख करोड़ से डाउन हो गई, 438.68 लाख करोड़. अब मतलब क्या है कि थोड़ा ग्लोबल मार्केट्स में रिस्क बढ़ा है, तो ज़्यादातर जो इन्वेस्टर्स हैं, ठीक है, वो किस तरफ शिफ्ट हो रहे हैं, गोल्ड और बिटकॉइन की तरफ ज़्यादा शिफ्ट हो रहे हैं, ठीक है. द फंडामेंटल इशू इज हाई फिजिकल डेफिसिट ऑफ द यूएस विच द मार्केट फील्स इज अनसस्टेनेबल, ठीक है. अब जो हाई फिजिकल डेफिसिट हुआ है यूएस में, वो ज़्यादातर ये लॉन्ग टर्म के लिए मतलब सस्टेनेबल नहीं है, ये करेक्ट होना ही होना है ना. अब जो यूएस ट्रेजरी बॉन्ड्स थे 10 ईयर, 5 ईयर, 10 ईयर और 30 ईयर के, ठीक है, उन्होंने मतलब अपना कॉन्फिडेंस कम करेंगे आगे जाके. ऑप्शन में भी उन्होंने कम कॉन्फिडेंस अपना शो किया था, ठीक है. जो जापान में भी ये देख रहे हैं कि मतलब जो बॉन्ड्स हैं वो ज़्यादातर बढ़ ही रहे हैं. बॉन्ड की जो यील्ड्स हैं, अपन बॉन्ड्स खरीदें इंडिया में भी है, जापान में भी है, यूएस में भी, ठीक है, तो उनकी बॉन्ड की प्राइसेस ज़्यादातर बढ़ ही रही है. अब जो अगर मान लो यूएस के जो बॉन्ड हैं उनके क्या बोलते हैं, उनकी वो बॉन्ड यील्ड्स ज़्यादातर बढ़ेगी, तो ये इमर्जिंग मार्केट्स के लिए सही नहीं है. बट द सिचुएशन इज़ हाईली डिफरेंट नाउ. The root cause of the problem is unsustainable US fiscal deficit and debt. This may trigger some capital flows away from the US to other countries. इससे रिस्क है, ठीक है, फ्रॉम द US to flows है, ठीक है, where prospects for growth and earnings are better. विजय कुमार रेड्डी, ठीक है. मंदर भुजने, equity research analyst at Choice Broking said Nifty may find immediate support at 24,600, followed by 24,500 and 24,400. On the upside, 25,000 will act as a first resistance level, followed by 25,400 and 25,600 is the major resistance level out there, said by Mandar Bhojle, equity research and analyst at Choice Broking. Longer traded US Treasury yields hit their highest in 18 months on Thursday, while Asian and the dollar slipped as worries for the worsening fiscal outlooks in the world's biggest economy weighted on investor sentiment. The spotlight remains on US President Donald Trump's tax bill that is expected to be voted on this week in Congress. And investors are worried it could add about $3.8 trillion to the $36 trillion US debt pile. The weight on stocks in Asia with MCI's broadcast index of Asia Pacific shares outside Japan 0.5%, lower, though still near the 7th-month high it touched in the previous session. Japan Nikkei was down 0.7% on the stronger yen. China's benchmark index slipped 0.2%, while Hong Kong's Hang Seng index declined 0.8% in early trading. FINDI. On the institutional front, foreign institutional investors were net buyers with inflows worth 2,201 crore rupees on May 21. Domestic institutional investors also remain net buyers. Net buyers purchasing equities worth rupees 683 crores on the same day. The oil price eased on Thursday as unexpected builds in US crude and fuel inventories raised demand concerns, while investors stayed cautious, focusing on renewed Iran-US nuclear talks. Brent futures slipped 33 cents or 0.5% to 64.58 a barrel by 0.00038 GMT, while US West Texas Intermediate crude dropped 32 cents, 0.5% and 61.25. Both benchmark lost 0.7% on Wednesday. The Indian rupee fell 2 paise to 85.61 against the US dollar in early trade. The dollar index, which tracks the movement of the greenback against a basket of 6 major world currencies, declined by 0.02% at 99.53 level. Yeah, this was it. What big prediction from Rich Rick Warren. Gold will go to $25,000. Best-selling author and financial educator already known for his book Rich Rick Warren doubted down on gold in a post on the social media platform X, predicting dramatic surge in its price amid economic turmoil. He described the recent U.S. bond action as a failure and called it a harbinger of financial collapse. Good news, gold will go to $25,000, silver to $70, Bitcoin to $5 lakh to $1 million. Blowout. Kiyosaki declared the end is here, expressing concerns about the hyperinflation, a collapsing bond market, and severe consequences for the global economy. What if you threw a party and no one showed up? This is what happened yesterday. Kiyosaki wrote, referencing the U.S. Treasury recent 20-year bond auction that drew soft demand from investors. It follows the U.S. Treasury Department's struggle to attract buyers for a $60 billion sales of 20-year bonds, reflecting growing investors' anxiety over the ballooning national debt and fiscal uncertainty as Congress debates new spending legislation. Stocks and the dollar sold off following the weak auction results. While the U.S. Treasury yields rose, signaling market concerns about the long-term fiscal sustainability. Kiyosaki elaborated on the issue, stating the Fed has an auction for U.S. bonds and no one showed up. So the Fed quietly bought $15 billion of its own fake money with fake money. The author interpreted this move as a sign of deeper monetary instability, continuing the party's over high inflation is here, millions young and old to be wiped out financially. His reactions comes on the heels of Moody's downgrade of the United States sovereign credit rating, which followed earlier downgrades from Fitch Ratings and Standard & Poor's. In a post made earlier this week, Kiyosaki remarked that the downgrade signifies the US is like a deadbeat, dad who is spending borrowed money without a job and not taking care of his family. He warned that such credit downgrades may trigger high interest rates, pushing the US economy into a recession, potentially leading to unemployment, falling, failing banks, and housing prices. Even a depression on the scale of 1929. The recent bond auction only intensified those concerns. The auction's poor reception could spur bond market vigilance, investors demanding greater physical discipline and leading to harsher investment climate for the US government. Kiyosaki also reiterated his views on personal preparedness and financial independence, uh, urging followers to adopt an entrepreneurial mindset. I have always recommended people become entrepreneurs, at least a side hustle, and not need job security. He wrote in a prior post, adding that individuals should invest in income producing real estate, accumulate assets like real gold and silver, and today Bitcoin. As global uncertainty mounts, global markets appear to be reacting accordingly. Gold prices have been on the rise, and Bitcoin recently surged past $111,000, hitting its all-time high, fueled by increased institutional interest and demand for alternatives to fiat currency. Kiyosaki had consistently criticized the US Federal Reserve's policy and the country's departure from the gold standard in 1971, stating that each crisis gets bigger because they never solve the problem. Reaffirming his stance, he concluded the recent post with a stark warning. The end I've been warning the world about is here. May God have mercy on our souls, stated. RBI likely to go for deeper interest rate cuts amid slower growth, low inflation. Morgan Stanley, that is the Bank of India, is expected to go for deeper interest rate cuts as part of its policy response to slower economic growth and controlled inflation. According to a report by Morgan Stanley, the report said that policy approach is likely to remain counter-cyclical, meaning the RBI would take steps to support the economy when growth slows down. It is said we expect the RBI to respond with a deeper easing cycle premised on slower growth while inflation remains under control. Morgan Stanley expects the central bank to carry out a total rate cut of 1,000 basis points in this easing cycle. Out of this, 2 more rate cuts of 20 basis points each are expected going forward. It is also expected the RBI is to bring down the repo rate to 5.5% with a total easing of 100 basis points. It is added that risk remains tilted towards the more rate cuts if global growth weakens further, particularly if there is a recession in the United States, which could hurt India's growth even more. The report added that if the global economy slows down more than the expected, or if inflation in India moderates at a faster pace, the RBI could extend the rate cuts easing cycle bound, which is currently planned. In addition to cutting interest rates, RBI is also expected to use other tools to support the economy. These include measures to ensure the liquidity in the financial system and easing of regulations to boost credit growth. On the fiscal policy front, the report said the government is expected to stay on its planned path of fiscal consolidations planned in the union budget. The focus will likely remain on increasing capital expenditure to drive growth. The report also noted that while monetary policy will continue to support the economy, it may not fully offset the impact of slower growth. RBI's efforts are expected to serve as the first line of defense as domestic economic concerns rise. The RBI is also expected to remain flexible and take additional steps depending on economic needs, including maintaining adequate liquidity and supporting credit growth through macro prudential easing. coming specific on a question as to which are the sectors where numbers are good. I thought we had the first good signs of pickup in consumption, especially urban consumption, so be it QSR or be it retail, but it hospitality or even healthcare, be it hospitality or even healthcare, all those sectors, travel and tourism, aviation, all those did well. So that is one clear conclusion from the sector that consumption stock started to do much better. I think that broadly this earnings session has been a bit of a disappointment, and across the board large sectors like banks and BFCs software they have disappointed, and all across the board it seems that there are a lot of issues in terms of earnings growth, which of course may get resolved going forward with better monsoons, lower interest rates and tax cuts. But this earnings session had been a mixed bag. What this earnings session is also is telling us is that the market is going to get extremely selective. The broad based rally which we saw for the last 3 or 4 years, that may not continue into the future. Coming specific to your question as to which are the sectors where numbers were good, I thought we had the first good signs of pickup in consumption, especially urban consumption, should be it QSR, or be it retail, be it hospitality, or even healthcare. All those of sectors, travel and tourism, aviation, all those of did well. So that is one clear conclusion from the sector that consumption started to do so much better. Other than that, broadly it has been a bit of a mixed bag, but within sectors also which has disappointed, there could be a few winners like in cement. I thought ACC Ambuja Birla Corporation came in with a good set of numbers. So like that, if you go sector by sector, there are some winners, but by and large we come out of this earnings session with your ideas of lesser ideas than we interact. Pharma is a classical example of what I said, that one needs to be very selective in the market. And within the pharma, also companies which have slightly differentiated business model, they may be emerged to be winners. Within the pharma space, we like the CDMO companies where we think there are good growth prospects overall. I think because of China plus one, they will get benefit significantly, but there is still a lot of uncertainty around Trump tariffs for pharma companies too. So that also needs to be kept in mind. I would say it is important to be bit selective and focus on companies which have a different business model. And on the whole, investors should be equal to slightly underweight pharma as well. Last few quarters have been exceptionally good, so base factor will also come into play from next quarter onwards. Sure, you could see slowdown in earnings on that count as well. In Motilal or for financial services, be fintech, Top Finance, Torrential Pharmaceuticals, DLF. These are the stocks which are from the above 200-day moving average. India poised to overtake China as the biggest driver of global. India is poised to overtake China as the biggest driver of global oil and gas demand growth over the next decade. The shift marks a dramatic rebalancing powered by India's accelerating industrialization, massive infrastructure push, and a growing middle class with increasing mobility needs. But on the other side of the story is a slowing Chinese economy and a rapid rise in the electric vehicle adoption, both of which are cooling the country once insatiable thirst for fuel. Demand will grow faster in India than in China over the next decade as China's economic growth slows and penetration of new energy vehicles accelerates. Crude consumption in China will peak in the next 3 to 5 years, while in India we expect annual growth rate of 3 to 5% in the same period, and the Modi's report said. India economic engine show no sign of slowing. Real GDP growth is projected 6.3% in 2025 and 6.5% in 2026, putting the country firmly at the top of the G20 growth charts, highlighting the Modi supports this robust expansion combining with rising demand for transportation fuel and stepped up investments by state-run oil marketing companies in refining capacity and expected to keep oil demand climbing sharply. It is not just oil, gas too is becoming a biggest piece of India's energy puzzle. The government plans to increase natural gas shares in the energy mix from around 6% today to 15% by 2030. Demand is being driven by fast-growing sectors like fertilizers, petrochemicals, and city gas networks. Annual growth is projected between 4% and 7% through the end of the decade. Challenges such as affordability and patchy infrastructure mean leads to faster adoption. Meanwhile, China is actively producing. It relies on imported oil driven by pivot for energy self-sufficiency, cleaner alternatives, while the gas demand in China will continue to rise. With the carbon transition policies, the pace too is expected to slow as economic growth tapers with the pace gets larger. India's oil demand is projected to grow faster than any major economy with a rate of increase nearly double that of China in 2025-2026. According to OPEC's latest view, India's oil demand will increase from 5.5 million barrels per day in 2024 to 5.74 million BPD in 2025, making a 3.39% increase by 2026. The figure is expected to reach 5.99 million BPD, growing at 4.28%. In Costa, China oil demand is set to expand by just 1.5% in 2025 and 1.25% in 2026. However, the US will continue to be the largest oil consumer with a demand projected at 20.5 million BPD in 2025. Despite slower growth in the US and China, global oil demand is expected to rise by 1.3 million BPD in both 2025 and 2026, driven by India's increasing fuel needs. India's oil demand growth is being fueled by robust infrastructure development and growing transport fuel needs. Particularly as the country expands its road network, as a result, diesel remains the primary driver of demand. And the country's refineries are stepping up production to meet the growing needs. India crude oil imports also hit record levels with a significant portion coming from Russia. India is expected to import close to 1.8 million barrels per day of Russian crude in May 2025, marking the highest level in 10 months, flagged a Reuters report. The growing demand for lighter Russian grades combined with refining maintenance and upgrades is expected to keep imports high through mid-2025. So we will wrap up this stream in 1.5 minutes. Gold prices are regaining momentum amid economic uncertainty and rising physical concerns, while JP Morgan projects a surge to 4,000 per OZ by Q2 2026. Analysts outline securities see potential for a climb 3,800 per OZ within 9 to 12 months. With safe haven demand intact and central bank buying strong, the outlook for gold remains bullish despite recent price dips. The price of gold was sparkling not long ago as rising geopolitical uncertainty boosting the demand for the safe haven asset when domestic gold prices surged to 1 lakh per 10 grams. Global brokerage firm JP Morgan predicted the yellow metal prices would shoot up to $4,000 in the international markets by the second quarter of 2026. However, the recent easing of geopolitical tension has led to a pullback in safe haven buying, causing gold daily to lose momentum. In such scenario, what is the outlook for gold now? And is there more steam left in the yellow metal? JP Morgan predicts to surge of 4,000. Earlier April projected gold prices to an average of $3,675 per ounce by the fourth quarter of 2025 to cross the $4,000 per ounce level by the second quarter of 2025. The Global Investment Bank had cited deepening macroeconomic concerns and rising political instability as the key reasons behind the projected price surge. In its note, JP Morgan stated tariffs-driven recession and stagflation risks were forecasted to continue to supercharge gold's structural bull run. The forecast was built on the gains gold had already made in the first quarter of 2025 and had factored in continued strong demand from both investors and central banks and averaging around 710 per quarter on a net basis that year. The gold price is easing from its peak, which can be expected in the future. Gold prices may reach $3,800 per ounce in 9 to 12 months, according to analysts. Currency and commodities at Reliance Economics gold appears poised like of its bull run, with the possibility of the pricing climbing high as 3,800 per ounce in the next 9 to 12 months. Gold prices climbed above 3,220 per ounce. Persistent concerns over the U.S. economic outlook and widening fiscal deficit continue to fuel demand for safe haven assets. Further, Moody's downgraded the U.S. credit rating from AAA to AA1 on Friday, citing rising debt levels and increased costs that are significantly higher than similarly rated sovereigns. Fears of a potential recession, stagflation coupled with ongoing global trade tensions and further compressed sentiment around the U.S. economy. While there have been incremental improvements in the U.S.-China trade deal dynamics, the overall weakness could continue to pressure the U.S. dollar second half of the year, creating further upside for gold, TBD noted. With this, he added, the geopolitical risk remains elevated. The Russia-Ukraine conflict has been renewed diplomatic movement. The President Donald Trump citing the Ukraine Russia could begin immediate ceasefire negotiations, potentially without U.S. involvement, following a phone call with Russian President Vladimir Putin. COMEX gold appears poised for another leg of its bull run with a potential breakout above $3,500 per ounce. Do not rule price reaching $3,800 per ounce over the next 9 to 12 months. In Indian terms, the upcoming festival season and existing domestic investments demand has noted the gold price could rise above 1,10,000 per 10 gram and possibly even 1,15,000 per 10 gram. Given the backdrop of heightened global uncertainty, central banks are likely to continue accumulating gold as part of their reserve diversification strategies. Simultaneously, investment demand reflecting in robust ETF flows is expected to remain strong.